How are we getting on, guys? Luke here from LAGFX. I hope you're all well and you've had a brilliant weekend. I'm back today with another Sunday Sessions video. In today's video, both me and James are going to go over some of the pairs that we are looking at for the coming week. And we are basically going to run past our ideas, some of our analysis, and show you where we are looking to capitalize in the market. Now, I've got three pairs that I'm going to run through this week. We've got the XAU USD, so that's the gold pair. Great British Pound to the Japanese Yen, and then we've got Euro USD. Now, my bias is pretty similar with all of them. I am looking to sell with the majority of these pairs. We just need to basically wait for pullbacks and those right opportunities to get in on those sniper entries. So on screen here, we have the XAU to the USD. Now, this is a pair that we actually capitalized on in the week just gone. What I'll do is I'll throw some screenshots up on screen now, and you can see some of the trades that we placed on this pair. But as you can see, we did place a long position. So we actually bought into the gold pair. We capitalized on a lovely 200 pip swing there. And now that price is actually tapped into a point of interest that we have marked here. We are looking to see price ride lower, actually breaking these lows that they've created. So as we can see, price has obviously set a swing high here. Price has gone on to set a swing low here. And we're basically wanting to see price break below this because in bearish structure, the lows get broken, the highs don't. So we've got a high set. This is the low. This is the new lower high, and we want a new lower low to be broken below this low here. So we can expect now that price has tapped into our point of interest, and it has gone on to set bearish structure fractally as well on the 1 hour, 30 minute and 15 minute time frames. We can expect price to come down in a bearish manner. Once it's done this, we can expect price to then come back up, take a retest, and then go on to set new lower lows and lower highs. Now, within this move, we can expect plenty of impulses and retracements on fractal structure, so we can look to get in from those points. Looking on the lower time frames, we can actually see this fractal structure a little bit more clearly. So these lows and highs that are being set into the market, we can expect this to continue until we have a break in this swing low on the higher time frames. And then we can expect price to go bullish temporarily, do its retest on the higher time frames, and then go on to set its new bearish impulse on those higher time frames. Now, where would I be looking to get in? Well, we did just capitalize on that 200 pip swing here, which was brilliant. We had a 40 pip stop loss, 200 pips take profit. We had a brilliant risk to reward return of a 1 to 5, so that's amazing. Now, with this bearish move here continuing, what we can look to do is basically get in when we see the end of a fractal retracement take place. So as we can see here, price is still retracing. We basically want some displacement on the lower time frames. So looking at the 1 minute, the 5 minute, looking for those displacements in the highs and lows. We've got a higher low set here, and then price has actually failed to set a higher high. So this could be suggesting that price is looking to reverse. We would just need confirmation of that, maybe a break of this low here. Once price is retested from that, we can look to enter. So say that price, continues to fail to break this high, that builds confidence in those bears. Once this low is broken here, price breaks below that, we can expect some kind of retest, and then price to go bearish. We would be looking to enter in somewhere around here. We want to get that sniper entry, and we can ride it down to the break, or at least to previous structural lows on those higher time frames. So we could have an entry somewhere around here. This is just an example of a position that we could place. Let me just get this up. Enter in here, we'd have a very tight stop, maybe 20 pips, and then we could ride that down to this point here, because we know that price can come as low as this before taking an impulse up if for any reason price wanted to go bullish. So just to summarize, I am bearish on the XAU USD market. I am wanting to see these higher time frame lows get broke, new structural lows to be made, and we want to capitalize on that as much as we can do. Now moving over to Great British Pound to the Japanese Yen. If you listened to my analysis last Sunday, I told everyone to get on those sell positions. Price is going to be looking bearish. Has been green. We've not had a red candle since the 9th of March. So this is telling me that all Japanese yen pairs are going to be weak. If we compare this to, let's have a look at the Euro JPY, we can see the same thing. USD GPY, the exact same thing. Great British pound to the Japanese yen, we are seeing the same thing. Now this can only last for so long. What I'd be looking for is for breaks in higher time frame structure. So we can basically look for some kind of reversal within this. Me personally, I think it could come to an end either at the end of this week or the start of next, in which case we would be looking for those sell positions. The Japanese yen has been very weak for a very long time, which has caused all other pairs to appreciate. And it comes a time where price has to correct itself, and price has to come back down to some kind of balance. And I believe this is what's going to happen in the coming weeks. So we can see here how price has come up, setting that bullish structure. We've had a structural low put in here. Price has come in to set that structural high. We've then seen a break in this structural low, which tells me this is our first piece of evidence that price could be moving bearish. We've then seen highs put in, but these are lower highs comparison to this one up here. And then if we move down on time frames, we are seeing lots of displacement and more evidence that price is moving bearish. After this low was set, price has obviously moved up in a bullish manner. It's set a high here, so we've marked this as a protected high. Price has then gone on to set a low. It's gone on to set a lower high. It's then gone on to break the previous low, setting a lower low. So this tells me that price is moving bearish, and we want to capitalize on those sell positions. So we would just wait for price to finish retesting. Again, looking for displacement on the lower time frames. So breaks in this bullish retest. Once we have that, we'll be looking to enter. So we can expect price to continue to come up. It may trail. It's not gonna come and break this high that was set here, because this is now a protected high. So we can expect price to trail up, tap into any unmitigated areas, do what it needs to do, and then we can expect to see some displacement. Once we see that, we'll be jumping in as soon as we have confirmation of bearishness, and we'll be riding that down. So again, just to summarize, but on this pair, we've obviously seen bearish structure being put in on those higher time frames, breaking those lows from the bullish structure. So that tells us that price is looking to move lower. We've also seen bearish structure being put in now as of recent on the fractal structure from this retest. Again, giving us that evidence that price is looking to move bearish on the higher time frames. All we want to see is that retracement come back up. As soon as we have that displacement, as soon as we have that confirmation of a bearish move, we will be in and we will be holding until we see fit. This would be a good point to take a partial, as this marks the previous structural low. If for any reason price wanted to go on and set highs, like I said with XAU USD, this would be a safe bet to take a profit. If we do get a break of the structure, then we know that our sell position is on full swing, and we can expect even more lows to be created, and we can hold that position for a longer period of time. Now lastly, moving over to the Euro USD, we have clear bearish structure on the higher time frames. That's evident. We have then seen, as of recent, price retest in a bullish manner, which is expected. Just recently, we have seen a break in this bullish retest, again giving us that confluence that price is ready to take its next impulse down, setting new lows. So we want to jump on top of that. We want to get involved. As we can see, looking down on the lower time frames, we had the BOS here. Price came down, retested. We could have jumped on. We could have had a pending order set where this alert was. Let me just delete that. We could have had a pending order set here, activated, boom, straight into profit, lovely stuff. Now what we've seen is further breaks in structure, further breaks in this bullish structure here. This is great. All we need now is some kind of retest, and we can look to jump on those sell positions. Very similar to the other two pairs. This is just based off market structure, price action, and looking at those breaks of structure. If we wanted to look at this in, a technical way where we look at support and resistance lines, we can see how areas of support and resistance have been broken. This is building strength and building supply, which in turn is obviously pushing the price down. We have less and less demand being put into the market and more supply. As we can see from here, we have all these points being broken, which we would consider support and resistance. Again, we have another one, I would say another one here. We've got a tap here, which is your break and retest. And I'm sure if we go back, we'll see how price taps into these points. Price is resting above them. So these are areas, as we can see, that go way back. So if you wanted to look at it in that way, as support and resistance, you can do. And you can see how we are constantly breaking these levels of support, which are now turning into levels of resistance. Again, this is building supply into the market. This is pushing the market further down. There is less and less demand being put into the market. So however you want to look at it, you will get a similar bias. Now, in terms of drawing trend lines, there isn't really one that I could draw here that I would see fit flush. Obviously, if you've watched our Learn to Trade videos, you know that you want your trend lines to be as natural as possible. They shouldn't be forced to fit. They should just fit naturally. If they don't, they're not valid trend lines. So in terms of trend lines, I couldn't really put one on here, but I've just distinguished many levels of support and resistance that have been broken. We've looked at breaks in structure as well. There's so many different things you can use to get your bias and get your analysis and the trade that you want to place. It's just having the knowledge to do so. But what I do now in terms of my analysis is find my overall bias by doing a top-down analysis. So looking at the overall structure of the market, that gives me my bias. I want to trade with the trend and not against it. Then looking for those areas where price could be looking to reverse. Finding those areas using the Fibonacci or unmitigated areas within the market. Waiting for price to tap into those points. Once we see price tap into those points, we want to see some kind of break of structure. We want to see displacement in the market. As soon as we have that, we can look for a retest. As soon as price is retested from that break of structure, that's when we look to get in, and that's where we enter with our sniper entries. That's going to wrap up my analysis for this Sunday sessions video. James is going to take over now. He's going to run through some of the pairs he's looking at. He's actually looking at XAU USD as well and Euro USD. So he's going to give you his bias and show you what he's looking at, areas that he's looking to capitalize on. Me and James often have very similar biases. We just view the markets differently. There's nothing wrong with that. As I say, everyone has a strategy, and as long as it works for you, as long as you can implement that strategy and it works for you, then that's what matters. As I said, the good thing is our biases are always pretty much the same. If I'm looking to sell, he's usually looking to sell. If I'm looking to buy, he's usually looking to buy as well. So yeah, I hope you enjoy his analysis and I hope you've enjoyed mine. If you have enjoyed the video so far, don't forget to give it a like. All your support is very much appreciated. If you have any feedback on the video at all, if you are looking to capitalize on some of these markets yourself, if you have a difference in opinions, please leave them in the comments. We love to read your comments. And yeah, I'll pass you over now, guys. Thank you very much.
Hey everybody, hope we're all well. Hope you enjoyed Luke's analysis. Now passing over to me. I'm going to pick a few markets to look over, show you my bias, show you my analysis, and we're going to be starting here on the XAU to USD, so the gold market. Now, if you remember a few weeks back, I was actually looking for long or buy opportunities because after we displaced in the market, started showing signs of bullishness, in my eyes longer term, we had this impulsive wave up. I found some points of interest, some unmitigated zones down at the bottom of this impulsive wave down here. You'll see that price did slowly trade in, and I believe I actually walked you through the accumulation I was seeing with this wick that we see evident by this demand zone being the spring of the accumulation, that major manipulation, or also known as the footprint of smart money operators. So you'll see from here, obviously price displaces to the upside. In my eyes, okay, we're now ready to go bullish again, putting another impulsive wave back up to the final target. So we either could have got involved somewhere within the accumulation. If not, we see that price does just wick and tap into this demand zone before making another leg higher, obviously creating a higher high. However, from here, where we see the price reverse at the top of the market, ignore all this analysis on the right side, we'll get to that in a second. But you see that after that's happened, prices actually came to, so this should have been a higher low, a protected low in the market, but you'll see that this break of structure here actually invalidates that. I was trying to get involved in another long position here based off the 3-box strategy. So we had obviously impulsive wave higher, a demand zone left over unmitigated, some accumulation. You'll see we did manage to partial move SL to entry, so we did win on the trade. Unfortunately, it wasn't a full take profit run. However, as I said, we've had that break of structure, we've had that low penetrated, so early signs of bearishness to come. You see that what's happened here is price has come up and reversed, so this is the high that it's set, mitigating positions in here where we have a bit of market inefficiency below. And then from this region, if I actually go back down to the lower time frames, obviously remembering this is the market high, price did begin breaking down bearish, and these were just a few examples of how we could have got involved on Friday. However, because it's the NFP, I don't tend to trade on the first Friday of every month, so none of these were actually executed. I was just watching the market still, even though I wasn't placing, using the 3-box strategy, identifying each impulsive wave lower, identifying a point of interest, and just seeing how price was playing out, you know, just a bit of practice of the strategy, of the analysis. And you'll see that each time price pretty much played out perfectly. It tapped into our zone with a pretty clear distribution. The one that I was most intrigued by, though, of course, was the displacement. This should have been a protected low in the scheme of the impulsive wave up. However, now that has been displaced, it is confirmation of at least short-term bearishness. So after we had that displacement, I knew, okay, this could be a brilliant opportunity for us to get in on a short. However, of course, it was the NFP, so I didn't get involved. But you see, price did play out perfectly. It moved into our point of interest, it distributed, it then broke down, displacing the distribution on the lower time frames, traded back up, mitigated the last buy to sell, and then took off all the way down to the final target. So looking into this week, this coming week, I'm expecting price to just continue this bearishness, hoping to find entries as price continues lower. Hopefully look to see if there is some fundamental news that can inject some momentum into the market. Ideally, I would probably be looking somewhere in this region for a supply zone to find a mitigation. Now, what could be happening here in the market is that we're creating a level of liquidity right here. Obviously, we're seeing price reject from this region. This could arguably be the inducement of phase A of a distribution. We could see price blow through to clear the liquidity, tap us into this zone before then making the next move lower, hopefully penetrating the low to put in a lower low, and then potentially even coming as low as the previous low in the market. So our overall final target, which is here at 1890. So just trying to find some sell opportunities, ride that down to 1890, and hopefully profit from this potential new bearish run. So now moving on over to the euro to the US dollar, another thing that I have covered many times. You're probably going to notice I stick to the same handful of markets. So overall, we are in a higher time frame bearishness, this being an impulse down of the higher time frame bearish structure. However, I believe that now price is reversed. We're going to be bullish until we mitigate a position within the scheme of the higher time frame bearishness. So this bullishness here counts as a correctional wave within the higher time frame scheme. So just a quick insight, obviously this is a bearish structure, this being an impulsive wave down, and then we have these zones left unmitigated that I'm expecting price to slowly trade us up to. You'll see I've been doing the 3-box strategy as always. Impulsive wave, point of interest, we get some prolonged Wyckoff, a prolonged accumulation here. Displacement, price puts in another impulsive wave higher, exceeding the final target, and now we see that price is slowly trading us back down. I'm going to be watching this demand zone here as a point of interest, hoping to see price tap, accumulate, get involved in a buy position and ride that all the way up, partialing at this high or any intermediary highs I'd like to, but the overall take profit probably up at this supply zone at 1.12995. So now just looking into the US dollar to the yen market, I am seeing that price has reversed here. Now, in my eyes, what's happened after the reversal, this here should be a protected low. Now, the thing is, I don't believe that anywhere in here really needs mitigating. I was expecting price, if anything, was probably going to mitigate something in this region, fill market inefficiencies, but everything below seems to be mitigated. There doesn't seem to be anything in my eyes that sticks out as a footprint. So the reason that price has been taken this far down in my eyes is that supply has been introduced, demand is no longer as dominant, price could be ready to reverse and put in a correctional wave in the higher time frame scheme of things. So once I noticed this, I identified a supply zone, of course this being the impulsive wave. So we do the other box, this alone being the impulsive wave down, this being our point of interest, and you see that price it's just tapped and it looks perfectly, even on this time frame, as a distribution, obviously going into a buying climax, automatic reaction, secondary tests. We come up to that upthrust, clears liquidity. After the inducement, we inject the momentum. So I'm expecting, as you see by this alert, if price penetrates this low, if we displace the low here, I can then begin to look for some short positions to try and ride price down. Now, just a final update on the US oil market. I believe I included this in last week's video as well, explaining that we were involved in a trade here. Now, price is getting very close to the take profit now. This has been a brilliant catch, overall a 10 to 1. Unfortunately, after we took the first partial, I did move my stop loss to entry, assuming that all unmitigated order blocks had already been tapped into, already been mitigated, because we had quite efficient structure moving down. However, you see we have a large push up through all of this structure, clears some liquidity, tapped the entry, so actually took me out of the position. Of course, I did still profit from this. However, I know that some people that got involved in this trade didn't actually move SL to entry, probably kept it at the region that I stated, or the region I had it at. And therefore are still profiting, running in around 8.6 IRR currently. So they should have a quarter of their position still running. Obviously we took one partial here, another partial here, which leaves a quarter of our position running all the way down to 10 IRR. So I believe if this trade does play out, if we do get the take profit hit, if people didn't move their SL to entry, of course here we get a 1.75 RR partial. We take 50% of the position off. So that is 1.75%. Here, we're taking a quarter of the position off at 4 RR. So that is another 2%. That's 3.75% overall. And then from this here, we then get 5%. So that is going to be a total of 8.75% from this trade. But regardless, that is going to conclude my section of this Sunday sessions video. I've run you through a few markets, shown you my bias for this coming week. As always, I don't want to forget to mention that if you want to be updated with this analysis, if you want to see how we actually tackle the markets when the markets are live, then make sure you're involved in the LAGFX Learning Lounge, because we give updates throughout the week. We give insights into new markets. We give insights into how we look to place the trades on the markets we have analyzed. So do not miss out on this information, completely free of charge. There is no charge to be involved in this group chat. It would honestly be a no-brainer to get yourself involved and learn to profit and analyze alongside us. But with that being said, thank you for watching, and we'll see you next week in the next Sunday sessions video.